So where do things stand right now in regards to Bitcoin mining? We've seen hash rate waver after the halving, but miners haven't really been selling their Bitcoin holdings. And in fact, Glassnode data showed that Bitcoin miner reserves have actually begun ticking up in July. So what do you make of where miners are at this point, a few months post-halving?
Yeah, I mean, since the halving, we saw a bit of a market pullback. So miners are speculating just like everyone else, thinking that as soon as the sideways summer ends, we're going to start seeing uptick in the fall. So you have a lot of miners banking on that.
Okay, so aside from the price of Bitcoin and the hash rate, there's been a narrative shift amongst Bitcoin miners. I just wrote a story about how miners in Texas are pivoting to AI, given that they already have much of the infrastructure in place to make that conversion relatively easily. What do you make of the shift that some miners are making toward this new demand for high power compute?
Yeah, really at the end of the day, miners are profit driven animals. So they're going to go wherever they're going to get paid the most for their electricity, because the reality is electricity is the commodity that miners work with. So if they can get paid more from the Bitcoin network, they're going to mine Bitcoin. If they get paid more by doing AI compute, they're going to do AI compute. The difference is AI compute is very, very expensive to set up for miners. So there is a huge amount of upfront capital cost. So it is a massive commitment. When it comes to power grids, miners can't fully switch over to AI compute because it's not going to allow them to do what's called production following on the power grid. But they can switch over a little bit of their capacity to AI compute to try to get better profitability.
Now, on the flip side of that, some have argued that blockchain and AI could actually work together. There's an argument that some make that blockchain could help with verifying information that these models get wrong. Do you see a merging of those two technologies happening? And are the companies that are building out this high power compute for AI services in the best position to benefit?
Yeah, definitely. So one of the projects we're working on with the Lumerin team is a project called Morpheus, which is all around merging blockchain and AI, where we can have on-chain verifiability for different AI models, where you can have providers anywhere in the world provide anonymous, decentralized compute to AI users. Is really going to be the next frontier for technology with the emergence of crypto and AI coming together.
Now, we've seen M&A and deal making among miners pick up a lot this year. How long do you expect that to continue?
Well, I think we're just starting to see the bloodbath. We're seeing miners are holding off as long as possible. We knew with the halving coming in, people were trying to retool, trying to cut the fat as much as possible, trying to slim up their OPEX. The reality is they're only going to be able to hold off for so long. A lot of miners are actually holding more Bitcoin, as you said earlier, trying to wait for the market to come back up in the fall. If the market comes back up in the fall, then they can sell their Bitcoin at a higher profit and they can stay solvent. If it doesn't come up fast enough, a lot of these miners are going to be going under and they're going to get gobbled up by the large publicly traded miners. Now, the publicly traded miners, because their goal is to just increase revenue regardless of profit, they can actually take a hit on profit by gobbling up these larger or these smaller miners and just continue to grow their revenue. And that's what they're going to do for their shareholders. So I really think more and more acquisitions are going to be happening through the fall and the winter. And it's going to be a bloodbath. I honestly think towards the winter and spring of next year, we are going to see a massive shift in hash rate among the publicly traded miners.
Now, there's also this criticism that mining facilities use a lot of power and AI data centers do too. Do you think that that continues to be a problem within the industry, even if they make the conversion? And how do you think they mitigate those concerns?
Yeah, so Bitcoin miners using a lot of power is actually a good thing for the power grid. It really allows power producers to be able to produce at a more optimized level. And Bitcoin miners can actually counterbalance power producers to balance the grid. AI compute cannot do that. Unfortunately, AI compute is not a flexible load like Bitcoin mining is. So as I said earlier, Bitcoin miners can only adjust so much over to AI compute. Now, what we see with AI compute is like an arms race. So we see Microsoft going into Arizona, trying to buy up a quarter of the nuclear power load in the middle of Arizona. We see a huge amount of AI compute facilities coming online, and it's really anywhere in the world there is enough electricity capacity. We're seeing more and more AI compute centers come in. The problem is they cannot load balance the grid like Bitcoin mining. So really at the end of the day, if you take a macro level look, Bitcoin mining will be the saving grace of AI compute in the world. And I don't think a lot of people have realized that yet, but it's really the only thing that makes sense.
Now, to change gears before I let you go, we're expecting any day now to get an answer on whether spot Ether ETFs will get approved in the U.S. Some say that the spot Bitcoin ETFs that got approved in January went a long way in terms of legitimizing the technology in the eyes of Wall Street. Do you see that being the case for these products? If they get approved, will they have as much of an impact as the Bitcoin funds?
So Bitcoin on a technology level is actually very, very simple. Ethereum is a lot more complex, and then Solana is even more complex after that. The problem is you have investors that will come in and they want to follow the momentum. So Bitcoin has a ton of momentum. You have a lot of countries adopting it, a lot of large institutions adopting it. So it makes sense for a lot of investors want to get involved with ETFs, even if they don't understand it. Now, when they start moving into Ethereum ETFs, they even understand, they understand it even less than what they understand Bitcoin. So it's really going to be highly speculative. Now, if the SEC wants to approve that, I'm not an expert in that area, but it does seem to be that's where it's going. So whether it be a Ethereum ETF, Solana ETF, we do have a huge amount of education that we need to get out there to investors to understand what they're getting involved in, because it's really, really speculative at this point. What that's going to do for the markets, well, clearly when you have more investors coming in, it's going to drive the prices up, but they're going to be exposed to the volatility of crypto. I mean, I've been in crypto since 2012. A lot of my friends have been in crypto for over a decade now. So we're used to the ups and downs, the volatility. We believe in the technology. We know what's being created and we know the value of it. A lot of these ETF investors don't understand the technology. They don't know what they're investing in. And until they're properly educated, they're not going to see the value. But once that switch is flipped and they see the value, then it's going to be incredible. It's going to be to the moon, I'd imagine.